Good morning, everybody. It's the 6th of September. We are Signal Centre Talking Ball. I'm Joe, joined by Jamie. How you doing, Jamie?
Yeah, all good. Thanks, Joe. It looks like Steve is enjoying his time in Spain. Not here at the moment. Maybe join us a bit later. But yes, all good. All good. Thank you.
Good, good. Yeah, he may be full up with sangria, so he may join us when he does wake up. He is an hour ahead as well, so he's getting a lay in. Here he is now. Sorry about
Sure.
the technical issues as well to start the session. There he is, Steve, in sunny Sitges.
Still working on that.
There we go. We can hear you now, Steve.
Can you hear me now? Yeah.
We can.
I thought you dummied me. I thought you sort of sent me somewhere else, and just
No,
thought,
few
yeah,
technical issues, but we're back up and live now and streaming on TradingView. So welcome to everybody that's watching, and pleased to have you here, Steve, joining us from sunnier climes. Although weather here has been obviously pretty good as well, but it doesn't look anywhere as good as your backdrop at the minute, and that's not fake, is it, Steve?
it's not fake, no. And
No.
yeah, it's lovely. A hotel, May
Yeah.
Terramar in Sieges, and yeah, just
Do we
I'm
get
not here out
kickback
on a
for that
holiday.
recommendation?
Well, yeah, maybe that's what we should do.
Yeah,
Um, but yeah, I'm out here working actually, just
of
sort
course you
of
are.
like for everyone's information. Our
Yeah.
headquarters, our parent company, Acuity, has its headquarters in Sieges, so I have to go from here, traipse along
Yeah.
this like huge 2 mile, well, it's about a mile and a half beachfront, which isn't, obviously a bit of a chore.
There's
And
worse
then
commutes.
exactly, yeah, yeah, it does take me back to the days on the train going up to Liverpool Street. It wasn't
Yeah,
quite as nice as this. I'll
absolutely.
definitely swap it.
A few San Miguel's last night.
Yeah, a few. Actually, it was Irish Stout, and it was from a brewery
Irish
called
stout.
yeah,
You can't
O'Hara.
do that when you're in Spain, can you? O'Hara.
Well, yeah, I was trying to sort of introduce the local guys to a little bit of Irish culture.
So they're not
Uh,
at work today then?
Actually, funny enough, they do have Tuesdays off, so we only had a
Makes
couple.
sense.
It wasn't too many.
All right,
Well, a
lovely.
couple.
Nice one.
Cool. Okay, let's get stuck into the latest headlines then and have a look at what's been moving markets over the last 24 hours. Obviously, it was a holiday in the US yesterday, so it was a little bit quieter than usual. In terms of what's happening with the the Eurozone Centix Business Confidence Index declined further to minus 31.8 for September from a previous reading of minus 25.2. That was weaker than expected and obviously further dented the confidence in the Eurozone area. The European energy fears continue as well. Gas prices retreated from intraday highs yesterday, and that provided obviously a marginal bit of relief to the markets, but there were still important concerns surrounding energy prices. Gazprom stated that flows through the Nord Stream pipeline would not resume until Siemens fully repaired the faulty equipment. So more work to be done there. In terms of what's going on in the currency side of things, yen remains on the ropes. The Japanese finance minister Suzuki warned over recent forex moves, but the rhetoric had no impact in reversing negative yen sentiment, with sharp losses as yield spreads dominated Japanese currency moves. The dollar yen saw a fresh 24-year high yesterday above the 141 level. In terms of what's happening in the UK, we continue to get hawkish talk from the Bank of England members. The policy committee member Mann stated that a drift in medium-term inflation expectations was already apparent. She also added that it was better to act forcefully and fast to keep expectations in check rather than adopting a gradual approach. We are expecting some substantial UK fiscal support ahead. That's following the appointment of Liz Truss as the new Prime Minister. There are increased expectations that there will be very substantial fiscal packages to address the energy crisis, with stronger speculation of a package of over 100 billion to freeze energy costs. Who knows where we're finding that, but that would obviously be welcome. But yeah, obviously produces other problems potentially down the line. And overnight, we saw the Reserve Bank of Australia increase interest rates by another 50 basis points as expected. The overall rate now at 2.35%. There was little change in forward guidance, with the bank suggesting that rates were now in neutral territory. So let's get stuck into some charts then and have a look at what's happening there. Steve, are you ready to start, or should we start somewhere else today?
No, I'm ready
He's
to
ready.
start, mate. Yeah.
He's ready.
Can you see the screen all right, the charts?
Perfectly, yes.
Yeah.
Yeah, all good.
Okay. Yeah, looking at Bitcoin first, obviously, we've talked about this, where take you to the weekly chart. This shows the, as long as I can see my mouse, a bit of a glare from the sunshine in the background, unfortunately. Sorry about that. Yeah, we've got this barrier of support, really. I say it's a barrier because it feels like it's just stalling this inevitable move lower in Bitcoin. Over the last couple of weeks, we've seen some decent downward trajectory from around about the 25,000 levels, just banging on the door of this. It seems to be holding quite regularly around this 19.5, 20,000 level. Yesterday, we could see quite a decent spike in both directions, really. Got up to only over a couple of hour period, up to 20,170, back down to 19,690. I suppose on a daily candle, that's not a great deal. Sorry, that's overnight, actually. That move, we saw the spike up overnight here, the period of 1 o'clock to 2 o'clock, just a temporary spike, and then a sell-off. So that could be just like one big position actually buying. So I think we can just take that as just normal market action, really. But overall, looking at the 4-hour chart, trying to get some levels out of here. We've got this. This is what we've been seeing basically since the 28th of August until now. So a couple of weeks, we've just seen prices supported here, 19,500 as I say, and rejected here. Although we do have this downward sloping resistance, so it's almost turning into descending triangle formation. So definitely want to watch, and a descending triangle formation is a continuation. So, but yeah, I won't get too excited until it breaks. Going on to commodities, let's take a look at gold. Had a that continuation higher. Yes, the previous day stalled. That was from Friday. Sorry, what day are we today?
On Tuesday, Steve.
Yeah, sorry, this is the 4-hour chart. So yesterday's spike higher stalled at 1726, and we saw a rejection overnight and prices moving back down, trading at 1717 at the moment. We had this little flag formation that we highlighted after bouncing from support at this band of support we've got below 1690. And do you like it the way I call one a barrier and one a band? Sort of like
Love
gold.
the consistency.
I really sort of expect gold to bounce higher in the long run, but we are toying with this support, and until we break free from this area, I'll still be a little bit cautious on the gold upside. So I think if we go to the daily chart, we might see the sort of nice channel that we're in. You can see this, just scrolling a little bit just to give you an idea. This is the daily chart, and we also have this double top formation, 2 arrows here. That's from the all-time highs, and the double top formation will be confirmed when we get a break of 1680, or if we get a break of 1680. But yeah, this downward channel is obviously we're still within that, and we really need to recapture ground above 1765 to stave off this this move lower. Otherwise, yeah, look out for the support, and really probably needs to get above the $1,800 level to sort of start to think about recapturing, or at least attempting to sort of recapture the heady heights that we saw this year. Up at 2070. Taking a look at silver on the daily chart, we're into the support area. A band of support here, probably from. I mean, it's sort of like takes itself really. The real support we've broken through. This is at the next level or band of support here. And we're trying desperately to keep our head above water. It seems to be under a little bit more pressure than gold is. The current bounce from 1757, trading at 1836, but I expect resistance will sort of like cap gains over the next day or so. There's no, unless we get a serious downward move in dollar, which doesn't look likely at the moment, then these precious metals, which are priced against the dollar, will remain under pressure. Copper, still on the back foot as well in copper from the shooting star candle on the 26th of August. Although yesterday we did post a bullish outside candle after a doji candle. So nice little formation here in copper. One of my favorite formations, a morning doji star reversal. And we've seen good follow through today as well. So a little bit more upside on copper is expected, I think, after holding at support, and it stalled, you can see, at 61.8% fib retracement. So a nice corrective level to stall at and advancing on. So yeah, could see a little bit more further upside in copper. Looks quite positive on this chart. Looking at crude oil, we talked about this yesterday, had a nice reversal from after posting an inverted hammer here. Nice push higher yesterday, although we didn't quite reach the levels that we were hoping for, I think, from my gun to head trade idea, but and it pulled back. So didn't do quite as well as I was hoping on that. We'll see the results towards the end of the show, and a little bit of indecision today, but still looks quite promising. I'm still would be quite bullish of this, but really would need to capture ground above the $90 level and hold above there on a closing basis. So on a daily basis, if we can get a close above $90, that's pretty positive for oil, this WTI crude oil. The support initially coming in at 87.20, and then we have a nice band of support down here around about the $85 level. So that's one to watch. The similar levels that we have in Brent crude oil is the support coming in at $91, and resistance really need to get above the 96.5 level to give the bulls a bit more hope on the upside. Natural gas toying with this resistance level, still sort of like desperately holding on. The 890 support has been broken. We actually closed above it, below it yesterday, and we are trading below it right now. So under a bit of pressure this morning, a little bit of dollar strength or any sort of like good news on the supply side of things should lend help to this maybe this resistance holding and seeing natural gas move lower. However, while we're still around this level, you have to respect it. And we really, obviously, although we got a close above it on a daily basis, it wasn't enough, and we quickly engulfed the following day. That was the 22nd, 23rd of August. So yeah, that's about it from my side of things. I can hand over to you, Joe, and we can talk about the how the dollar's doing, I suppose.
Yeah, thank you very much, Steve. Okay, so let's start off with the US dollar. Yesterday, we hit new highs, touching that 78.6% Fibonacci retracement level that we have on the chart in blue, 110.25. Now, that is a level that goes way back, all the way back to this left-hand side, from the highs that we posted here in 2001 to the lows that we posted in 2008. So a pretty important level there, pretty much touched it to the tick. We've also got some resistance there in red that we've highlighted at 109.29, and above that we've got this black line of resistance at 111.31. So a few barriers that need to be taken down on the dollar index in the short term, but overall the trend still remains very positive. Let's just flick this back to a daily chart. But interestingly enough, yesterday we posted a bit of a turnaround candle. If we zoom into yesterday's price action, we can see we actually posted a gravestone doji on the dollar index, which is a pretty powerful reversal candle. I mean, I think we need to see some confirmation of that today with further weakness potentially. There's obviously a long way to go in the session. We are slightly on the back foot by around 0.1% as things stand. But obviously, given how strong the dollar's been for some time now, you wouldn't back against it reversing and moving again to the upside. So further confirmation, I think, required there. But interesting that we did hit that 78.6% fib level pretty much exactly. And if you think how far that goes back, as I said, to 2001 to 2008, shows how powerful these levels can be when used on a variety of timeframes. So for me, a bit of stalling going on here at the minute. Need more confirmation before we can really make any further predictions about where dollar index is going to head in the short term. Overall, the trend still remains very bullish, so I wouldn't be backing against that just at this point. But some potential reasons there to maybe lighten up exposure if you are long of the US dollar. Looking at some of the other currencies against the US dollar, we can look at the euro. Yesterday, that made a marginal new low, going below 98.99, but we did close above that towards the upper end of the session's range. We are on the front foot today, up by almost 0.5% as things stand at the moment. So there seems to be some defense going on at the minute of this support level by the bulls and the speculators, potentially looking to push that higher in the very short term. So maybe some room for upside in the euro in the, as I say, in the very short term. If we take a look at cable, we actually saw a pretty decent session yesterday from sterling. Seemed to be reacting quite positively to the new appointment, the new Prime Minister Liz Truss. Decent turnaround yesterday following making a new low and backing that up today with further gains, already up by 0.66% as things stand. So we are expecting to get some substantial fiscal packages potentially put in place, and that seems to be improving confidence in sterling at the moment. So in terms of how much upside it's got, we have this black line of resistance at 112.59. That will be the first test for it on the upside. Has it got the ability to break through that and continue moving higher to form a bit of a better looking correction? Looking elsewhere, euro sterling, that's stalling around a 78.6% fib level, dipping a little bit this morning. So again, further highlighting the strength that we've seen in sterling. And if we just take a look at some of the other currencies linked to sterling, so we've got sterling Oz, that's on the front foot today, up by 0.8% as things stand. Got some resistance above at 171.73. We look at sterling CAD, it'll be a similar situation, making new lows, but reversing yesterday to close higher and pushing higher once again. Overall, the trends still remain very bearish here, so I wouldn't be looking for any sort of major turnaround, but certainly a bit of room for a corrective move to the upside in the short term in a few of these sterling pairs. Sterling yen is an interesting one. Obviously, we've talked about yen being exceptionally weak. We talked about this triangle pattern because I believe one of our followers, may have been Sanadid, mentioned that they've been looking at sterling yen, and we talked about this triangle pattern containing price, and it's done just exactly that. We saw a move down to test that 61.8% to the lower end of the triangle and into this band of support. It's done a really good job. It posted a bullish engulfing candle yesterday and a really strong move today, up by 1.3%, the best performing currency on my watch list this morning. But it's rallied straight into the upper end of this triangle. So it'll be interesting to see if it's got the ability to break beyond that and then maybe start a continued move to the upside towards our next resistance at 166.25. Let's also take a look at dollar yen. We had the finance minister Suzuki in Japan again commenting on the weakness in yen. Still no action from them at the moment in terms of intervention to try and strengthen the currency, but the more that they're being spoken to and the more comments that we're seeing in the press from people like this, I think raises the possibility that it could happen at some point. Nothing at the moment. We're closing in at 142 on the charts now, and there is really no sign of this slowing down. Certainly no sort of reversal candles that we can get too excited about. So it looks like more upside is the suggestion there for the short term. Let's take a look at some of the indices. As expected, a bit of a quieter day yesterday due to the US holiday. We can see here the ASX 200. We posted a bullish engulfing candle yesterday. We are posting a bit of a doji candle as things stand at the moment. So a little bit more for that to do before we can start thinking about more upside in the short term. Ultimately, we are still in a sequence of lower highs and lower lows. And while that remains the case, we can expect that the overall trend will remain bearish. Obviously, a break above 71.39 would invalidate that for the time being and may lead to a move higher in the short term. Looking at DAX, that's up 0.8% as things stand at the moment. We have seen a fairly sizable move lower following the break of this short-term uptrend. Starting to see this stall a little bit just in front of these lows that we posted back in July. Potential for a bit of a correction to the upside there. But again, the dominant trend still remains quite bearish. NASDAQ, quiet day yesterday. US market shut, as we know, into this 61.8% fib level on the daily chart. That's at 12,063. Seems to be holding there at the minute. Be interesting to see what sort of appetite the investors and traders in the US have when it comes to the US Open today at 2:30. And whether or not that will continue to push to the upside. But if this 61.8% level breaks or fails to hold, or if there's a reversal in sentiment, then we are eyeing the 78.6% fib level in blue, which is 11,611. And then below that, we'll be targeting these lows that we posted in June, all the way down at 11,035. S&P 500, similar situation, not much activity yesterday, still holding around this support at 39.66. We've also got another support below that at 39.02. A break of that level would also see a break of this short-term uptrend and could lead to more downside in the short term. But we'll have to wait and see, again, what sort of appetite the bulls have when we see the open a little bit later on. Finish up on the FTSE 100, really nice reaction from this 61.8% Fibonacci retracement level of this short-term period here, from the lows in June to the highs that we posted in August. We did overshoot the 61.8, but ultimately it seems to have done a pretty good job, certainly on a closing basis, and the last 3 days have been pretty strong. So how much upside we've got from here, I'm not sure. Probably getting boosted by the Liz Truss appointment, and the promise of some fiscal stimulus is helping drive the market higher today. That's it from me. Jamie, do you want to have a look through some stocks for us?
Yes, thank you, Joe. As we know, US was closed yesterday, or not the whole country, but the stock market, so no movement there. So we're gonna check out some of the EU stocks and UK stocks that we've got. We'll check out a heat map for the FTSE 100 actually today. Obviously this just opened, so I'm looking at the week performance to get a bit of an idea of where we're at. And you can see the sectors performing well. Finance had a really strong week, and retail trade, they're the really big ones you can see that perform well. Other than that, you can see there's a fair bit of red across the board. Yes, we'll dive into a couple of these names. Let's see what we've got. Starting off, we've got, what have we got here? Aston Martin. Don't think we've really looked at this before, but in a pretty awful downtrend. This is a week. I thought it was a weekly chart. This is a weekly chart we're looking at now. Since the IPO back in 2018, it's just been a pretty extensive sell-off, and we're near the all-time lows for this. Yesterday's performance was pretty horrible. Closing right near the low of the day. We have gapped up a bit this morning, but pretty low, high volume on yesterday's sell-off as well, compared to the previous few weeks. So Aston Martin not looking so hot. Checking out ASOS, posted a bit of a bullish hammer yesterday. You can see down here, and opened pretty strong today. It's really up 7.5%. But again, we're in this pretty extensive downtrend, just not really even lower highs. It's just been one big sell-off with not a lot of relief since the start of 2021 really. So not like to like here. If we do get, I mean, it's early days, it's only Tuesday, but if we get a weekly close near the high of the week, that's the kind of thing I'd want to start seeing. But as of now, one bullish hammer alone isn't going to be enough to really change what I think about this stock. Avax Group, this is one we have looked at a few times. Looking at a weekly chart, you can see, as we've mentioned, the support and resistance both doing a pretty good job. Resistance coming in at this 38.2% fib, and just above it as well at 142 pence. Held up really well again here. Sold off, and we've had a bit of a sell-off into this week. So I'm keeping an eye on this 100 pence level here to provide some more support. I think it will. To what extent it will remains to be seen, but it's done a pretty good job a number of times before now. Let's have a look at Barclays. Barclays one we put out an idea for yesterday, so we'll drill down to a daily chart to look at this. Looks like we might get triggered today. Certainly a bit of a can't remember the word. Not risky, but we're going against the short-term trend here. You can see we've had some higher lows being put in, but this resistance has done a pretty good job. So for me, the idea of fading this resistance and keeping that tight risk reward seemed to make sense. We'll probably get stopped out now on stream. That would be really sad. But yeah, this looks like potentially a bit of a turnaround and a move higher. I'm just looking to fade that temporarily, but I do think the way this stock's been acting, it could certainly break above this resistance at some point. I'm just hoping it's not before I hit profit. Let's check out a few more. Nothing too much to say on BNP. Boohoo as well, pretty horrible again. What did I want to see? I did list a couple more I wanted to look at. BP is near all-time. No, it's not. I'm thinking of something else. I'm thinking of something else. Let's fly through a couple here. EasyJet been selling off pretty extensively. We had a bit of a bearish flag put in, broke through that. The sell-off has continued, although we are up 4.5% today. This is still looking pretty bearish to me. I guess it's trying to put in some support at this previous low here, this area. That would be what I'm looking at to break next for that move lower to continue. What else have we got here? IAG. Let's look at this on a weekly chart. Oh, that's not. This is. Let's get rid of this writing. There we go. So we've got a bit of a descending channel here, providing resistance at the top and support at the bottom. Looking at this on a daily chart, I think last time I looked at this, this was a support level for me. Broke through that and it's retested it as resistance. Tried it twice, then broke back down, heading towards these lows. Looks like we're heading back towards the. Well, that's not COVID. That's actually October of 2020 lows. But yeah, that looks like where we're heading here, unless we do get some kind of turnaround. Again, I guess we are at some kind of short-term support. This is the same level we reached in July. Maybe attempting to form some kind of bottom, but let's see what price action does there. ITV, I don't care. Lloyd's, kind of similar price action to Barclays, really. We are posting a bit of a higher low here, with price opening 4% up today, heading towards this resistance line at 46 pence. Man United, the one we all care about, posting a really nice bullish flag here, ready to extend much, much higher, moving up with our position in the table, so I'm liking the look of this very much. Have we got anything else really? We've looked at Rolls-Royce a few times, had this breakdown through support. Looks like we're having a bit of a correction higher, up 2% today. I'd be looking at this previous support level to possibly become resistance before seeing a further sell-off. And this pink line, remember, is the measured move target of this bearish channel we saw here. So let's see if we do get down to those lows. I think that's pretty much it. We can call it a wrap, I think. Yeah, nothing else I care about too much. Finishing off here, I guess, a pretty well-defined channel here on Tullow Oil. Look at this for a weekly chart. I'm looking for a break, really either way, to give us some direction, but at the moment it's buying at support and selling at resistance has probably worked quite well for people that have been keeping an eye on that. But yeah, looking forward to getting the US markets open today and seeing what direction we're taking for the rest of the week.
Cool, thanks Jamie. Okay, we have had a request on the stream to look at a couple of cryptocurrencies, ones that I'm not familiar with, but happy to take a look at the charts anyway, unless Steve or Jamie want to take a look at it. It's LDO and OP. Yeah, do you want to take a look, Steve?
Yeah.
So
LDO against what? Against
US dollar. Yeah.
I suppose we've got to do against USDT, but
there is one on there, LDO USD from Gemini or Binance.
Yeah. Okay. And what was the other one?
OP.
OP? Is that it?
Yeah.
Surely they could think of something else to add on there. It's nice to have three. Yeah, OP.
Optimism.
Okay.
Yeah.
Let's take a look at this, drill it out to like a daily chart. So first thing I see is this inverse head and shoulders on a daily chart. So looks quite promising, really. If we're looking at this overall, we had a nice double bottom formation. This was from the June time period, to June to early July. So a nice double bottom posted there. We did get the break of, let's see if I can see these numbers, 77 cents, I would call it. and that would give you a measured move target from about 40 cents to 70 cents. Would take 30 cents above that would be where the target would be. So that took that target out really nicely, continued higher. Looking at it, we're seeing a sort of like two formations you can really look at. We can see the sort of like this potential double top or potential head and shoulders formation on the, so looking for downside. So you draw it something like this. So as I say, I'm going to show you two different sides of the coin almost. And then we'll say the neckline coming in here, looking to form this right shoulder. Now, this is a potential formation. We wouldn't get excited about it unless we got a break of, I'd say, the low of this head to right shoulder neckline. And that would be at 155. So below 155, I would take profit on any longs or think about setting shorts. Measured move target for that would be, if we did get a break, measured move target would be a move back down towards 77, which is where we broke from the upside, the sort of downside previously. Now, if we get rid of that chart and look at the bullish side of things, why won't it delete? Remove drawings. That's the quickest way of doing it. So have we got the potential for a continuation higher? And this is the initial move I talked about, the inverse head and shoulders. So if we do manage to break above, even say again the head, the neckline between the head and the right shoulder, 219, even better if we got a close above 233, then you'd like to think that this would have a move back towards them highs that we saw previously. So that'd be eyeing up a move to the $3 level. So that's the two formations that really stand out for me. Over the last couple of days, we've seen some good price action, a little bit of a, can't see if it's a bullish hammer, it looks like a bullish hammer here, really looking to break this neckline and get quite excited if we do break and close above it. So it's looking pretty decent, I would say, overall. Then we get up here, but overall, I keep thinking about how I feel about Bitcoin. It's sort of like going to be, if Bitcoin has a break of that support that we talked about around about the 19,500 level, it will naturally put a bit of pressure on these other coins, the alternative coins. Opus seen maybe a similar type of formation. We've got this nice double bottom here, broke the neckline. So the double bottom was between 20, well, call it 30 cents and 65 cents. So that would give you a 35-cent target. So that would give you a target of $1, which it achieved really nicely as well. And looking at price action now, doesn't look quite as good as the LDO coin we just looked at, but it still has the sort of like the potential for an inverse head and shoulders. So definitely one to look out for. You know, if we're looking at really short-term moves, this would be quite a nice move, but we really need to see a break and a close above 134 on a daily basis, and that would confirm this inverse head and shoulders and look for further upside. Like if we again, if we want to look at a the opposite of this, we'd really take that 135 level as a good area of resistance, and it's all about money management, trade management, selling in front of this level with a stop really tight above, if you are looking on the bearish side of things, would be quite a decent risk reward trade idea. Trend line here, quite a steep trend line. Let's draw it properly. Let's get that and just extend it right. That's where the trend line comes in. So today's high looks to be quite key. If we can break above this high and close above here on a daily basis, then that short-term trend line would have been broken. But really, for me, the key level is 135.50 to watch, below a break below the $1 level. and we're going to the lows again. So yeah, hope that's helped.
Thank you, Steve. A couple of FX requests as well. So let's just take a look at a couple of charts there. So first of all, we had a request for Euro New Zealand dollar. So I will bring that up on the charts now. So going to start off with a weekly chart here, because this is always a good starting point just to understand what is the dominant trend in the market at the moment. And if we look at the weekly chart on Euro New Zealand dollar, from what I can see there is a bearish channel in place on the weekly chart. So the general trend is lower, but that doesn't mean there can't be opportunities in both directions in the shorter term. What I have highlighted here as well is that there was a fairly substantial pickup in volume last week, which can be an interesting sign, can indicate that maybe there is more appetite out there to own euros versus the New Zealand dollar. We can see, however, the corresponding candle with that doesn't really give us any kind of opinion either way. We did rally as high as 164.77 before then closing pretty much where we opened the week. So a little bit of indecision there despite the increase in volume. So we've got lots of volume going on, but we didn't really go anywhere. So that, again, is what highlights the indecision in the market at the moment. But if we take a look at the intraday, or not the intraday chart, sorry, the daily chart, then what we can see is that price has been very choppy. So that can provide decent opportunities for trading. But obviously, you've got to be very careful with this and make sure you use appropriate risk management. Now, looking at price action in the shorter term, what I've highlighted here is a double bottom. So we've got the bottom here from August the 12th, and we've got potentially another bottom here from the 26th of August. Now, with technical analysis, it is very subjective. People see different things. This is just what I'm seeing and how I would potentially look to play this. So when we look at double bottoms, the way we can actually measure where we believe the price is going to move to on the upside is take a measurement from the low of the double bottom to the proposed neckline of this double bottom pattern, which I've got here at 162.47. And then we've been extending that move higher, and that comes in at 166.24. And then above that, we have an extension of the 161.8 Fibonacci extension of that double bottom, which comes in around 168.52, and also lines up nicely with these previous highs. So looking at this as a double bottom, we've seen the breakout to the upside. We've seen a nice pullback to retest the neckline of this double bottom, and that's done a pretty good job. And now we're moving higher up by 0.75% as things stand. So from a trading perspective, that looks quite nice to me, I think, in the short term. What I'd then be looking for is what sort of risk reward I can get out of the trading opportunity. And anything less than a 2-to-1 would probably be disregarded by me based on my own approach. So if I was to buy it here and target the first upside target at 66.25 with a stop loss below the low of the candle that was posted yesterday, that only gives me a 1.1 risk reward ratio on that trade as things stand at the minute. Now, if you were to buy it a little bit lower, then obviously you can try and improve your risk reward on that. So that may be the preferred strategy if you're looking to target that first target that we have at 166.24. If you wanted to target the extension of that move and into these resistance levels here, then the risk reward ratio does improve to just under 2.2. So that would be more preferable for me and something that I would consider based on the double bottom pattern that we have on the daily chart there. So hopefully that was helpful and provided some direction for you on that. The other suggestion we had, or request we had, sorry, was for euro sterling. Now, again, I will refer to the weekly chart just to get a bit of an overview on direction. And this has been, all in all, quite directionless, to be honest, for some time. So prices sort of ground lower towards this major support here at 82.77. We then saw a decent bounce to the upper end of this range at 87.91. And we are trading sort of closer to the upper end than we are to the bottom end or to the middle at the minute. Really strong candle last week, a little bit of a push higher in volume as well, but in general, the volume has been declining since this point here in June. And looking at it on the daily chart, and I highlighted this earlier when we went through the currencies, we've seen euro sterling rally into a 78.6% fib level from these highs that we posted in June down to these lows that we posted in August, and that seems to have stopped the buyers in their tracks, and we are seeing a little bit of sideways price action or a bit of indecision into this level at the moment. So my preference, I think, would probably be to sell into this kind of level with a stop above those highs that we posted in June. Overall, the pair remains very range bound. So if you are going to trade it, look to trade the ranges, look to sell at the upper end and buy at the lower end until we get a break out of this range. And that would be the preferred strategy from my perspective. So again, hopefully that was helpful. Any other requests before we move on? Let's have a quick look. Doesn't look like it.
I think that's it.
Thank you very much for the coins. It's very much appreciated. And we're glad we can help. So let's move on to the gun to the head challenge now and have a look at our trade ideas from yesterday and then provide you with some new ones for today. So just a reminder for anybody new, we pick trade ideas live on the video each day. Each of the ideas must have stops and targets. They're all placed at market, and the trade ideas will expire at 9 p.m. UK time or when the stops or the targets are hit. This is a highly speculative approach to trading. We are making it up, pretty much on the fly. So therefore, there is a speculative nature to it, but it is just a bit of fun. So if you want to follow these ideas, feel free to do so, but obviously take note of the risk warning that I've just delivered. If anybody wants to follow these trade ideas, it's very simple to do so. You can just go to our TradingView profile and check those out. That's signal_center. And then you'll see all of our trade ideas that are published as we come up with them. So yesterday, Jamie was buying natural gas. Looked as though it found a decent support level. If we click the play button, we can see how that worked out. Jamie, it went to the downside, but you weren't stopped out of the trade. So I think from my calculation, you're offside 0.42 R on that yesterday. Certainly better than getting a stop out. I was looking for a gap fill on New Zealand dollar CAD to play out. So gap fills are often a strategy employed by technical analysts, and they can work quite nicely. We did see a decent move to the downside by the 9 o'clock close, so I was 0.73 R on side with that one. It then actually revisited those highs that we posted on an intraday basis before then collapsing lower and looks to be heading towards the target. So that would have been nice had we had extended expirations, but we don't. That was closed off at 9 p.m. last night. And then, Steve, you were looking at an inverse head and shoulders on oil, and that was on side by 0.04 R at the close yesterday. So,
Winner, chicken dinner.
well, it is a win. Yeah, a win's a win. So, yeah, congratulations to you. So, 3 new trade ideas coming your way now. Guys, have you got anything ready to go?
Yeah, I'm going to stick with my play on crude oil, and I've sort of set this up a little while ago. Price has moved up, so I'll just adjust the levels. So we're getting in here at 89. 89.14, which is a bit annoying because my stop was right. I have to move my stop now because I want to take it below that swing low. 87.94. I'll do 120. Gives us a target of 360. So I'm looking at setting longs 89.14, targeting a move to 92.74, which is around a 61.8% fib, and stop will be 87.94. So like $1.20 stop on the downside, $3.60 target on the upside, 3-to-1 risk reward on this bad boy.
Indeed. Jamie, have you got one ready?
Yep, I'm good to go. For some reason my screen is not sharing, but I'll bring it back on. I'm taking a look at the euro against the Aussie dollar today. Honestly, there wasn't a lot that I was loving the look of this morning, but flicking through the 4-hour charts, I've seen this currency pair is at a resistance level which is held up 3 times in the past without being broken. We are there again. It does look like it might get broken through at the moment. We are posting higher lows on the chart. But as I always say, you can get some really good risk reward out of this, and it just needs to hold until 9 o'clock for our gun to head trades. So I'm going to look to fade at this resistance again, selling at current price of 1.4700. So we'll have to move that a little bit lower. That's okay. Keeping the stop pretty tight, giving it a little bit of room above this previous high in case we do get kind of stop hunted or something. Keeping that at 1.4766, and our take profit, we're just going to kind of target this low here. We are looking at a 4-hour chart, so to kind of target anything much lower, for me, doesn't make a lot of sense. If we bring up the ATR levels, you can see that this is the kind of range we're seeing each day. We're already targeting slightly below that, so for me, you still get a nice 2.8R risk reward if this does play out. So keeping the take profit at 1.4515. There we go. So yeah, like I said, if that plays out, 2.8 R will be coming our way, looking to fade Euro Aussie dollar at resistance.
Nice, looks like a nice inverse head and shoulders from where I can see, but maybe it will fail. Let's wait and see. It's not a head and shoulders until it completes the patterns, and it hasn't done that yet, so every chance. Okay, I'm going to take a look at Ethereum today. Actually, I really struggled to find anything that interested me, so I'm going to take a look at some multiple timeframes here just to kind of build a picture of why I'm looking at this. This is the weekly chart on Ethereum. So first up, we can see we've got a nice sort of rounded top pattern here that's formed on the weekly chart. We've also got some fib levels drawn on the chart from this swing high here that we posted in April earlier this year, down to these lows that we posted in June. We've got 38.2% fib level here at 1911. That's done a very good job at preventing further upside, and we've also got the neckline of this top pattern as well, which comes in roughly at 1728. So while below these levels, for me, the bias does remain bearish. So drilling down into the chart here, this is a daily chart. I can see if you squint, there is a head and shoulders top pattern that's formed here. We have not respected the neckline here. We actually broke through it with quite an impulsive candle, but we've seen prices continue to move to the upside. We haven't taken out the right shoulder, and while that remains the case, I still feel that this is potentially a valid pattern, and therefore we could see more downside. So looking at that on the daily perspective, and if we drill down into the intraday time frame, then what I have here is a shorter term Fibonacci set up from the highs that we posted here on the 25th of August down to the lows that we posted on the 29th. We've got a 78.6% fib level here. That comes in at 1657. And we've also got this red line that we've highlighted here. I really like these levels when you see them on the chart. It's kind of a level here that's been untested. So we posted this really big impulsive candle. We then saw prices continue to move quite aggressively to the downside. We haven't seen a retest of the low of this candle prior to that big breakdown. And we're getting a retest of that now. And that's also coupling up with the 78.6% fib level. So I'm going to sell it at current prices of 16.59. I've got a stop loss at 17.09, which is just above this high here. If you wanted further protection, you could definitely go above the high from the 25th of August. But in order to improve my risk reward, I'm going just in front of that. And I'm targeting a move down to these swing lows here that we posted around the 3rd of September. And that comes in at 15.36. So risk reward 2.41 on this trade today. And I'm going to get it published up shortly to our TradingView profile. So if anybody wants to track the progress of those or indeed follow them, please feel free to do so. But of course, it's at your own risk. And we'll see how these go between now and 9 o'clock this evening. Okay, day ahead. What have we got on the calendar today that's likely to impact trade? So at 3 o'clock UK time, we've got the US ISM non-manufacturing index number. That could be something that moves the market. We've heard from the Federal Reserve officials that pretty much all data will be considered when addressing monetary policy. So they'll be looking at pretty much everything that's considered high impact, and US ISM non-manufacturing is definitely one of those. Overnight, we've got the Australian GDP number come out. That's at the 2:30 a.m. UK time. We'll all be tucked up in bed. But of course, if you've got any exposure to the Australian dollar or to the Australian indices, then please be aware of that number. It could create a fair amount of volatility. Throughout the rest of the week, we've got a policy decision from the Bank of Canada tomorrow. Then we've got the ECB on Thursday. And then to finish off the week, we've got the Canadian employment report. That is that, I believe, from us today, unless there's any more requests or you guys have got anything else to add.
All good here.
Lovely.
No, good.
Okay, well, thank you everybody for watching. Thank you very much for your support and your participation as well. It's much appreciated. We'll be back tomorrow. And until then, everybody, have a fantastic day. Goodbye.
Cheers.